Hey, what's going on, guy? Welcome back to my channel. It's been more than a month that I actually post any video about the market because it took me a lot of time to do a video. And most of the time after I trade, I just want to get rest, play sport, and enjoy my life versus going to YouTube. But anyway, with all said and done, I'm gonna go ahead and do a video today. I'm gonna go talk about how and why trading is so hard, but it can be easy. Okay, and vice versa. It can be easy, but it also can be really hard. A lot of people have seen the market going crazy for the past couple of weeks and months. Since February to now, the market's so volatile. It also wiped out a lot of traders. A lot of trader has blown up their account, losing so much money because of the volatility, so much up and down in the market. All right, anyway, without talking too much, I'm gonna go over a couple of points that I might be able to help you guys in terms of becoming a more profitable and consistent trader. Question number one is going to be, well, the only question you want to ask is how to be a consistent trader, a consistent profitable trader. It all boils down to several factors. I'm going to break down into 5 components to be a successful trader. Number one, you need to have a plan before the market open as a day trader. Okay, you need to have a plan in any stock you watch. What it means is you need to know when is your entry, when is your exit versus when is your stop loss. Okay, which means that you need to have a plan of what area you're going to buy, what area you're going to sell, and where you're going to get out and admit that you are wrong in the direction of the stock moving. All right. Most people come in, turn on a computer in the morning, and they watch the news. They hear, oh, Apple got some upgraded, or Apple has a new product, and exciting. Just wait for the market open. As soon as the market open, like for example, this is AMD. As soon as the market open, let's just buy immediately by call. If it's a good news, or if it's bad news, let's just buy immediately the put, for example. Or some people just trade on a candle. They see a red candle, they put right away in the open. Okay, very dangerous. I used to do that before when I was a beginner, and now it's been like 4 or 5 years of full-time training. So that was a pass. All right, number two, as I mentioned, you trade on FOMO, fear missing out, and chasing and trade on the news. So you trade without a plan. Go back to number one. You don't have a plan, and you see the market coming down, and then you want to chase it. You short it, and then a few minutes later, as soon as you buy in order put, the market reversing up, and then you just got stopped out, and you're scared, and you lose on that. Or you heard some news about like really bad news about like let's say Facebook has some bad news, and then at the open you buy put right away, or you short Facebook, and just that's what happened. It bounced on there, and you're sitting there and you question why the hell Facebook has bad news and it's still going up. What the heck happening? Well, because a lot of factors. Maybe people buy it on the dips, or maybe if the market maker knows that everyone is trying to short it, so they push the stock higher so that the option will be expired and worthless, because a lot of people try to put the Facebook. I've seen a lot of time the market going totally opposite directions. That was one time that I lost substantially when I saw the news on Boeing that had a plane crash on a date like a few years ago. And I was a beginner. I was just sitting on my lap and waiting for the market open. As soon as the market opened, the bell rang. I bought right when Boeing put. And then when Boeing go up a little bit, I keep buying put. And then by the end of the day, I looked at my portfolio. I was down like a lot of money on that. So that was, you don't trade on just the news. All right, number 3, reason why you don't make money or you lose money or you blow up your account is because you size up too much, right? So what I mean by that is you don't trade one trade, you don't just throw in your account in a trade, right? You just don't throw everything in the trade, in one trade. And that's what happened when people try to throw in everything and the market go against them. You got frozen. You're gonna get frozen. You're gonna be, what the fuck happening here? And then you don't know what to do. You just get frozen. Your brain freeze. And then you start arguing with the market that, oh, I must be right. But the market always right. You always be the one that loses money if you argue against the market, right? As soon as I know that I'm wrong, I usually get out right away, cut my loss. I rather keep my losses small and then, move on to the next trade. But anyway, if you throw everything you have in your account, you have $10,000 and then you buy right at the open, or you went all in, you go all in the trade, and then the trade go against you, you don't have a plan. You just sit there and then keep watching your portfolio going down lower and lower. Eventually, you're gonna get lower. Number 4 is you are too greedy and want to get rich fast. This is very true for everybody. Sometimes you take a trade. Let's say you take a trade right here. Let's say you short right here, and then there's a level here. It's gonna bounce, and then there's a level of support here. Instead of getting out right here, you want to wait all the way here, right? But what happened? Market reversing and then go higher, and then you lost your money, you lose your money. It happens all the time. So you watch your P&L. Let's say you take this trade, you watch P&L from positive 500 to watch slowly coming down until become negative 500. So that's $1,000 swing because you're too greedy. You're not taking profit, right? So also it leads to the point of you want to get rich fast also because you throw in the size in it. All right. So the last point is you don't have respect for the market, which means that if the stock already came down, you short the market and it came down into a support right here, for example, and then you already make a lot of money already on this way down, but you aim for more, you want more, you don't take profit, right? So that's also really bad. Bottom line, 5 point you need to know as a trader is, number 1, you need to have a plan. Number 2, do not trade on FOMO and chasing. Number 3, do not size up when you're not ready. Number 4, you're too greedy and you want to get rich fast. Do not be greedy and take it slowly. Number 5, always respect the market. The market's always right, and you are always going to be the player of the market, but you have to play by the rule and respect it, right? Don't just think that's going to go down forever or it's going to go up forever. There's always another trader on the other side of your trade. Pretty much it. Very fast point, and I hope you guys, I think a lot of channels talk about that, but really, just want to throw out there at some point, and really hope you guys take notes on that. And that's something that everybody needs to work on every day, including myself, even I've been training for years. So thank you very much and have a nice day.